Cardano is about to break out. In fact, it's already breaking out. It's up 12% in the last 24 hours. It's even trending on Twitter. Now, still, Cardano looks interesting because its relative valuation to Ethereum is still pretty low. And recently, we even see usage of the decentralized apps, as in the total value locked, according to DeFi Llama, is at an all-time high measured in ADA tokens. Now, that's due to the increased adoption of MinSwap, the largest of the decentralized exchanges on Cardano. And so we see quite a bit of capital flowing into the liquidity pools. The leading pool being a pair of ADA versus the Min token. And this is where potentially the opportunity might lie in case you want to take more risk than just simply buying the ADA token. Because the MinSwap token has already 4x'd, more than 4x'd since beginning of the year. Now we're going to look at all of this in detail within this video. We are also going to look at the best back-tested moving averages. So that's what I like doing on this channel. I like to simulate buying and selling Cardano, and I like to find out what's the best moving average historically. And by the way, we are currently breaking out. This does look bullish for ADA. Now, first things first, let's look at relative valuations of Cardano to Ethereum and to Bitcoin. What we have over here is ADA in ETH. And this is a very long-term chart starting in October of 2017. And Cardano tends to go in those waves, right? There is a lot of hype around Cardano, maybe a new release, and then that hype dies down and Ethereum is taking over. And there seems to be a somewhat predictable range from bottom to top. The maximum rally is roughly an outperformance of 360% versus ETH. Now we are just bouncing off that support. The support we have hit in April of 2020 and also in the very early days in December of 2017. Now the relative performance to Bitcoin doesn't look that great. It's still in a downwards trend. It's still relatively high within that downwards trend. It's somewhat in the middle of that sideways trading range. So the potential underperformance versus Bitcoin is still 69%. The potential outperformance is 330%. Now, what does this imply? This implies that Bitcoin is likely going to outperform Ethereum if both of those trading ranges, of course, continue to last. Now, I personally still think that Bitcoin dominance is likely going to rise. There's still a lot of capital moving from traditional finance to Bitcoin, Bitcoin being the safe haven asset when the banking sector is collapsing. Ethereum does have quite a bit of risk, and it does take time until the capital moves from Bitcoin to Ethereum to the alts. So currently we do not have altcoin season. If you just look at the altcoin market cap relative to Bitcoin's market cap or relative to Ethereum's market cap, altcoin season isn't yet starting. Still, when Bitcoin goes up, the altcoin valuations in US dollars also go up. It doesn't necessarily mean that it outperforms Bitcoin, but it is very likely, at least according to this relative valuation chart, that ADA has potential to outperform ETH in the next months. Now, usually the risk with altcoins in general is inflation. The inflation for Cardano isn't too bad because it's already a quite established altcoin. The price data here goes back all the way to October of 2017. And thus the supply schedule of Cardano doesn't look bad. It's simply just staking rewards. There isn't any unlock happening for the internal teams, for insiders, for VCs. That's usually what tends to depress altcoin prices quite a bit. That's not a risk for Cardano. What's interesting is that the total value locked, according to DeFi Llama, is climbing. Now in US dollars, it's not that impressive. In US dollars, we have seen more than double of the total value locked. But of course, crypto since March of 2022 went down. And so we have to look at this in the native token, and that's a good thing, right? We see that the decentralized applications on Cardano are now being used. It's not just a token that's being bought and staked. It's now a token that's actually being used. And what is it mainly used for? It's mainly used for MinSwap, the decentralized exchange that's seen, even in US dollar terms, a 1 month total value locked increase by 31%, currently at 50 million. Still relatively small for a blockchain with that kind of a market cap, but Cardano is always somewhat lagging, right? They try to rather take the safe route and try to prevent hacks, etc. That's why we don't yet see the hundreds of millions or even billions of total value locked. Now this is how the total value locked looks for MinSwap in ADA over time. So this is where the rally for the overall Cardano ecosystem is coming from. This is the landing page of MinSwap, and here we've got interesting statistics around the decentralized exchange. So this is the total value locked increase, and this is in sync with the trading volume as well. So this is not just people depositing into the exchange, it's also additional usage of the chain. And one driver for this could be the massive increase of that MinSwap token. That's probably one of the factors. Another factor is that Singularity Net, the AGIX token, also has quite a lot of their tokens on Cardano, right? There is an Ethereum-based token, there's a Cardano-based token. The Cardano-based token is roughly 10% of Singularity Net, and Singularity Net is quite a hyped cryptocurrency right now due to the ChatGPT, due to the artificial intelligence run-up. And so MinSwap is being used, MinSwap is going up, the token is really picking up steam. Make sure you time this right? If you're considering to get into MinSwap, make sure to not necessarily buy when trading volume is very elevated, right? When trading volume is high, the price tends to be high. When trading volume goes down, the price also tends to go down again. Now the trading volume is somewhat high, so I would not be surprised to see the MIN token to go back to maybe 39 cents, 38 cents. Very much a possibility. Now let's look at the back-tested moving averages. If you're new to this channel, you don't know about this. If you're watching this channel for a while, you're very familiar with this. I quickly sum up the idea. The idea is that you want to be betting on falling prices whenever the price is below the moving average. And you want to be betting on rising prices whenever the price of, in this case, Cardano, is above the moving averages. So you switch your position based on the relative standing of the price to the moving average. Now the question is always, what kind of moving average generates best buying and selling signals? In order to determine this, we can run a backtest. We can simulate this based on past experience, right? What would have been the best approach? Simply just going back in time and looking at all of Cardano's price, all of the history. And when we do this, we find two interesting moving averages. The 138-day simple moving average and the 38-day exponential moving average. Now, if you traded Cardano according to those moving averages, this would have been your return here in turquoise. In white, we see the price of Cardano. In turquoise, we see the result of the backtest. So you would either be betting on rising prices sometimes, and when we are below the moving average, you would be betting on falling prices. So while Cardano is going down, the backtested line is going up. This is a logarithmic scale, right? So these horizontal lines here are 10x from one another. So this is a massive difference. When we look at this on a linear scale over here, you can barely see the price movements of Cardano because the portfolio line is simply increasing so much. This is compounding. And so what we have seen here before this chart, this is the result of all of those backtests. So on the x-axis, we've got the duration of the moving average, and on the y-axis, we've got the annualized return, the annualized performance every single year. And so these are the 2 points we look at. In green, that's the simple moving average. So this is the best performing SMA, and in red, the best EMA is over here, the 38-day. So this is how we pick what moving average we actually want to take. We simply look at what used to work well in the past. And when we plot those two moving averages that worked really well in the past, this is what we get for Cardano. We've just come above both moving averages. This is a bullish signal. This does mean that measured in US dollars, ADA is likely going to further go up. Now we do have our fake outs, right? Look at this. We sometimes go above the EMA, then we go below it again. We even see this once here for the SMA. So this is no perfect strategy. This is not a strategy that never generates bad signals, but it is a strategy that at least in aggregate over a long period of time tends to perform very, very well. And so even though this is not a 100% reliable thing, it's better than just randomly guessing, than just randomly take, say, the 200-day moving average or the 100-day moving average. If you use those kind of moving averages, you would still outperform buying and holding, but why not optimize this? Buying and holding, by the way, is here this black line. So the back test starts in October of 2017. We are not trading for the first 200 days though, because that's the time we need to calculate the first moving average. So trading starts in April of 2018 when Cardano was at 26 cents. Now it's at 37 cents. So buying and holding during that specific time period wouldn't have given us that much, only 8% per annum. But look at how much we outperform using moving averages. It doesn't even matter that much what kind of a moving average you take. The strategy in general tends to perform very, very well for Cardano. Cardano really moves in those waves. And so we simply just see how the back-tested portfolio tends to get further and further away from the price, right? When we just look at the delta itself and we subtract the price line from the back-tested line, this is also pretty consistent, right? A quite nice, consistent outperformance. Now I've done a lot of those back tests, so that's for the premium members. You can simply copy paste this TradingView script into your TradingView interface, and then no matter what asset you look at, you will get the best back-tested moving average for the assets, of course, that I've back-tested. So in case you've got a specific altcoin that hasn't yet been back-tested, of course, feel free to simply just request this in the premium chat. There is a Telegram-based chat. There's also a Discord-based chat. And yeah, look at this. This is our indicator alerts channel. So this triggers whenever one of the best back-tested moving averages does get crossed. So you don't have to manually look at all of those charts, manually change all the durations of the moving averages. You can simply just sign up for premium, look at the indicator alerts channel, and then whenever we see a cross, you get a message, and then you can decide by yourself if you want to execute on that signal or not. Now these signals get triggered always at midnight UTC. So we're not trading within the day, we're simply just looking at the end of the day. Midnight is the price currently above or below, and based on that we decide, are we going long, so are we betting on rising prices, or are we going short and want the price to rather fall. So there's no need to always be stuck to the phone, stuck to the computer in order to execute. Simply just a matter of once per day to look at the signals and to then decide by yourself. There are also free channels, Discord and Telegram down below. Looking forward to see you there. And of course, in the next video, the premium membership description video over here. See you in that video, and thanks for watching this one. Bye bye.